Get that $65,000 is a major resistance level. We will rally most likely straight up here. This hidden bullish divergence playing out yet. Multiple Bitcoin divergences are pointing to the fact that we are that close to go back to the upside, and the frustration that everybody is experiencing right now might be blowing over really soon. I will go through multiple charts that are going to show you which targets I'm looking at and how I'm going to position myself for this upcoming move. Let's go. Guys, I'm back. I'm back in my beloved studio. It feels so great to be home. And now let's get directly going here with the Bitcoin chart. So on the daily chart, what we can see is that Bitcoin is maintaining the macro support level, the upward sloping support that is giving us over the macro here since January support. We came back down, tested this here once again. Also, the underlying demand zone was helping us to maintain current levels, and from there we got once again supported and see a small move now back to the upside. Now, of course, a lot of you guys still wondering, is this a solid move? Is this just a dead cat bounce? Will we just get another swing failure when we come up here to 64 and come back down? These are all things that we are going to talk about here, so stick around for that. Here on this daily chart, the Fibonacci retracement levels telling us clearly to which price level Bitcoin has to go on the macro structure that we can continue this uptrend. And the minimum level that we need to reach is $62,800 approximately here into the golden pocket. But we should also not forget that $65,000 is a major resistance level. And why is this major resistance? Because it was here holding us afloat above $70,000, afloat above $70,000 here and there. And here we broke down. And then it turned into resistance. Here became again support, but then on the way down, one retest as support. Then we broke the support to the downside. Since then, this level remains resistance. So when we are coming up here, I expect that we will initially get rejected, and then at the second attempt, gonna break through that unless something crazy is going to happen. Some macroeconomic factors will lead to a straight pump through that level, but otherwise we are kinda going to see first a test of that level, rejection, then we see another attempt to break through that, which will most likely be successful. But on the way up, there's also other levels that we need to look at. Here on the lower time frames, what I want to show you is that when we're looking here at the Fibonacci retracements, that we have touched already the 0.618, the 0.65, and that level is holding as support here on the shorter time frames. And also the 0.65 level was tested here, and it was just a couple minutes ago that we tested it and got again rejected from there. Once we are breaking this small downward sloping trend line on the lower time frames and also breaking the 0.5 level, we will rally most likely straight up here to $64,000 and will test that $64,000 level over the next couple hours. So I want you to be prepared for that. So now how would I trade this? Once we are breaking the 0.65 level, here $61,400, once we're above there and you get a 15-minute candle close above that level, that would be my entry to the $64,000 level, all the way up there. You see also on the indicators that everything is favoring right now the upside. Stochastic is going to the upside. The RSI is gaining momentum and is also here creating some divergences on the lower time frames that I'm going to show you. And the MACD is also losing momentum on the seller side and most likely over the next 2 days creating a buy signal, which will then again put pressure on the price to move back into higher levels. Here on the 8-hourly chart, you see the first major bullish divergence, and that is here created by these lower lows and the higher lows on the RSI. And we also put in our first higher low if we close today's candle as it is and get another pump to the upside. And something else that I wanted to mention here is that a while back, I think it was almost 10 days ago, let me actually see, that was 2 weeks ago. 2 weeks ago, when we were up here at $67,000, remember guys, I told you, if we are losing this level here, which was at that time support, there were two things that could potentially be happening when we were running from that point onwards. Either we move here to the upside. At that time I said the less likely chance is that we're breaking to the downside, and lo and behold, we went down and actually reached all the targets that I had mentioned. So I'm not claiming here that I was super right in terms of the direction, because I was leaning to the upside, but I was right in terms of price movement and price level that we're going to reach if we would go to the into lower price levels. On the daily chart, also here is a hidden bullish divergence with a price creating lower highs, higher lows, and the RSI creating lower lows. We did not see this hidden bullish divergence playing out yet. I believe we are going to see that playing out once we are reaching $64,000 and can break actually above that. So that would be for me the confirmation that the hidden bullish divergence is playing out here right now, but we are not there yet. And as long as we are not changing the higher low and lower low structure on the price action and on the RSI indicator, we just need to be a little bit more patient. But also here on the macro structure, don't forget the big supply zone, where we're most likely going to see another big rejection once we're reaching it, is coming in from $71,400 to $74,400 approximately, and the bigger underlying support is at $53,000 to $50,400, because here is an old order block, and that will give us support if we would ever reach these lower levels, which I, for the moment at least, highly doubt, as long as we are holding here this upward sloping trend line. On the liquidation levels here, again, the directional move should be clear. All the liquidity is stacked to the upside. We are going to have a look here in a moment how much liquidity is there, but just here based on the liquidation levels to see how much leverage is in the market in terms of used leverage, we see that it is a quite big mix here between super high leverage of 50 and 100x to some lower leverage here of, like, I think this is 25, 10, 20, and then again here 50 to 100. So there is quite a mix in there. And once we are breaking the EMA ribbon here to the upside, believe me, we are going to see another short squeeze to at least $67,000, $68,000 really quickly. And I think when we're going here to the heat map, we're most likely going to see the same thing. When I go here to the weekly chart, in terms of the hot areas on the liquidation map, because that's the only thing that you need to look at, you know. So only look at the hot areas. Really simple, guys. Really simple. The areas that are hot are the areas where price is being attracted to like a magnet. So and here in that case, right now, this is the $65,000 level. There is almost $600 million worth of short liquidity placed. And also here below us, from 62,400 to 63,200. Once we are clearing here that small area of $62,000 to $62,400, you're going to see a short squeeze and short liquidation cascade to 63,200. And once we are building here a little bit support, you're going to see another push into the $65,000 area, which will again trigger another cascade leading to a move to $66,000 approximately. And then we see a retracement, most likely back to like 64, and then we continue to go back into higher prices. And most likely when I move it to the 1 monthly chart, that is also what the liquidation heat map will unfold for us. Yeah, you see here these kind of blocks that we are seeing here. Liquidity is concentrated in, so here you see at 66 there's nothing. So hence why I believe that we are going to see here a small retracement back to like 64, 800, 64 down here. And then we find and gain momentum again to push here into the next block of 67, 500, 68, 500. and will continue this upwards trajectory. Everything is pointing to it. Also, in terms of where we are in the cycle, guys, you should not forget we are in the optimism stage right now, and in the optimism stage we always get a bear trap. I think this bear trap is now complete. When I look here at the Heikenhashi candles, it looks like that we have hit the bottom with that big wick down here, and that we're not going basically lower than that. There is of course still a chance that by over the next 48 hours that we see one more squeeze to the downside again, which I highly doubt to be happening here, but that in the worst case would mark then the bottom, because it has to be lower than this prior low that we had at $58,000. Otherwise, we will follow the fractal, which is basically here that area of the chart. So this over here, we're gonna continue to follow this fractal from the last cycle more or less, and that will put Bitcoin by September, when normally everything should go crazy again, to around $85,000. Around $85,000. Between 80 and 85 is my guess where we should be over the next 6 weeks in terms of price action. And guys, don't forget, if you want to trade with me together in this volatile market, use BYBIT. You still get 30K if you sign up with the link down below. If you cannot use BYBIT, use Margex. There you can also copy trade me with the link under this video here and in the pinned comment. And if you just want to copy trade me on FAIRDESK and gain the highest bonus in the industry, $120,000, use the link that you find also down below here. Again, all these links are in the pinned comment below and in the description of the video. And just really quick, something that I want to mention, because some people were getting kind of angry about it. I did not give last week $1,000 away because nobody qualified. Again, you have to obey to the rules of the giveaway. If you don't do that, then there's also nobody that I can give it away to. For that reason, just to incentivize you, I'm gonna double it for the next upcoming week. So for the next upcoming week, again, everything counts from today until the end of next week. So you have potentially 10 days now. I'm gonna double it. It will be $2,000 that I give away next week. You need to sign up on BYBIT right now with the link under my video and deposit $100 and open one single trade. It can be a $1 trade. It doesn't matter. Open, close, done. 30 seconds, you lose maybe 50 cents. You know, in the worst case, if it's really bad for you, you lose 50 cents from $100. The next thing that you need to do is be subscribed to the channel and have the notifications on. And that is all you need to do. I'm not asking a lot from you guys. So, and last time there were only 7-8 people on the list, so your chances were pretty high that you could be actually one of the winners. Now, go sign up on BYBIT, deposit $100, open one trade really quick, in, out. You don't need to keep this trade, just open one, close one, out. Be a subscriber, have the notifications on, and I will put you on the list for the upcoming draw to win here $2,000. And I'm gonna keep doubling the amount. If you're not signing up on BYBIT and obey the rules, I'm gonna keep doubling the amount until it's going to happen, guys, and until I get a winner. Even if it's one person only applying all the rules and there's only one person on the list, yeah, lucky you guys, lucky you. So go and sign up right now on BYBIT so that you might be the only one on that list that followed all these rules. And now back to the charts here. A quick look at the Bitcoin dominance is telling us that we are still following the overall trajectory that I had given out here around the beginning of the month. So we're still following that, and we are also seeing finally something that I wanted to see here when the dominance is coming down, and that is price action going up or moving sideways in terms of Bitcoin price. That's what we are seeing here right now. I expect a bounce from the dominance around the 54.3% level, because that is a strong horizontal support, and on the lower time frames for the Bitcoin dominance, we might see something like this here playing out. So because we cannot go down in a straight line, we might see something like this, and then we are breaking down. So be prepared for that, that the dominance will bounce a little bit, in my opinion. So we are not going up, keep falling down in a straight line. Of course, that would be amazing because altcoins will just shoot for the moon. but I'm not seeing that. So, and it would be really unhealthy also. So what I rather like to see a small bounce here from 54.3%. Doesn't matter how high it goes, could even go here to 55% back up. I don't really care. What's more important is when we come back down that we are seeing something like this here unfolding. So I'm just moving things here a little bit around. So most likely it will look something like this here. So that would be healthy if we see something like this in a Bitcoin dominance over the next coming days unfolding. So I just want to be preparing you for that. So, and of course, in the best case scenario, once we are getting this bounce here from the Bitcoin dominance back to the upside, we see a major move here in the Bitcoin price. So that's what at least seeing right now here in the charts. Then the total market, something that we did not talk for a while about. Got also a really nice bounce here from the $2.18 trillion level. I think this definitely marked the bottom here. I don't think that we will come back down and create a lower candle over the next 3.5 days. I just don't see that. Now we only need to break back into the $2.25 trillion level to attack again the downward sloping resistance line that we have formed. And once that one is broken, I believe that we're going to see here a small, nice altcoin season where we are finally moving in the direction of the $3 trillion level. Ethereum really strong here right now, testing the downward sloping resistance. If you're not in an Ethereum trade right now, wait for the break of it at $3,440 approximately. Sorry, that green level above us is now resistance, so it should be in red. Give you here a word of caution. Even if we are breaking here this downward sloping trend line, which is strong resistance, we still face a bigger resistance area from the VPVR, from the longest volume bar here, so the most traded area at $3,500, and also here that area of resistance of $3,470. So be prepared to get here a little bit chopped up before we finally break through that, unless Bitcoin makes today a $2,000 move and we just move straight through it, and Bitcoin can actually hold that $2,000 move. Then things are changing and we can straight aim for the next level of $3,700. But until then, you can technically enter a trade once we're breaking the downward sloping trend line. Just have your stop loss at $3,360. So below the daily candle. That's where I would put my stop loss, just to protect myself, because that can go really quick against you if we get rejected from here. Also here on this Ethereum chart, on the 12-hourly chart, we are right now in the golden pocket, the Fibonacci extension levels. Once we are coming out above that, that could be a really early entry for you if you want to jump the gun here a little bit. But wait for at least a 30 minutes close above the $3,430 level before you enter. And again, the proper way to enter this would be only once we are breaking here above this trend line of $3,465, more or less. That would be the best entry. Again, if you want to jump the gun a little bit prematurely, be my guest, do that. I'm not doing that for Ethereum. I wait for this downward sloping trend to be broken with the confirmation that the golden ratio was a support level, and then I trade this in direction of $4,000. Then Fantom also really strong here, but got rejected on the weekly chart from this downward sloping trend line over the last couple of weeks. But overall, still bullish momentum. We have here the 50 moving average giving us support. As long as we stay above that, we should see another move here back into the 80 cents level, which is of course right now also resistance. And when we are moving into the daily chart, then also here we have a downward sloping trend line that we need to respect and need to get a proper break of that before we can enter here long-term positions. So if you want to build a long-term position here on Fantom right now, so for once you see the stochastic RSI has created a sell signal, but I think we can ignore that for the moment because the RSI is bullish and the MACD is bullish. So I would neglect that for the moment. But what we need to see here is a move back to 63 cents to get above the 200 moving average. That is the first thing that I would be looking out for before entering here into a Fantom position. So here, just wait a little bit more. You will get a chance to build here a nice position. The only moment where I would prematurely enter Fantom is if we would come back here to like 53 cents, 53, 50 cents. So there I would otherwise start building a position if we see a rejection from current levels, because that will most likely create a higher low. And then I just want to get in on the higher low. And then I trade this in direction of 80 cents and $1. Then Injective. Injective is trying to break here the horizontal level of $23.90. Once I see here a 15-minute candle close, I'm gonna enter a position and trade this into the golden ratio here of $28. That will be my next initial target for Injective. So if you did not enter here on the break of this downward sloping trend line, then just wait for a break of the horizontal level. That will be the next best entry. Also, indicators are looking bullish. MACD is giving us a buy signal today. RSI is pointing to the upside with a bullish divergence, which has already played out in my opinion, because we had here the lower lows and then we had here the higher lows. So that divergence has already played out and will be completely concluded once we are breaking above the $23.90 level. One more coin that I give you for today is AVAX. AVAX also super bullish. Look at this stochastic RSI, how we are pushing it to the upside. How I'm going to play AVAX, a dragonfly pattern. So and that is when we are forming here more or less like a V-shaped recovery, where you have two candles here at the bottom, either one wicking down, or both being the same size in terms of the candle body. So here we got the doji. So this dragonfly pattern is a reversal pattern. Here I only wait for a break of $27.50 more or less to enter this, and then my first take profit will be $30 because that's a 10% move, actually a little bit more. And if we can break this downward sloping trend line, then I actually keep that trade open to retarget the highs here, the prior highs of $65.31. And that's it for today's video already, guys. Thank you so much for tuning in. I hope you enjoyed it. Don't forget, smash up the like button, hit the subscribe button, hit the notification bell, and I see you then again tomorrow.